Jai Hind, dear students. Today we are moving to another important chapter from the class 12 accountancy, accounting for share capital. Accounting for company is the concept, major concept. Under that, accounting for share capital and accounting for debentures. Two units are there. So remember, it's very important. You have to remember now on full area from the debenture, redemption of debenture is deleted. Total 20 mark questions we have to expect from the chapters issue of share and debenture. Most probably they will ask 6 to 8 mark question from issue of debenture. Remaining will be from issue of share. So you have to give more importance for this chapter, very important area, and no need of preparing any accounts, only we have to learn how to write the journal entry related to the issue of share of a company. You know very well the famous definition of a company. As per the Indian Companies Act of 2013, a company is an artificial person having separate legal entity distinct from the members and has a common seal used for its signature. So, company is an artificial person having separate legal entity and perpetual succession and common seal. They have ability to sign in the official document through the common seal. Digital signature also nowadays used. So this is the famous definition regarding a company. And for this company, two sources of funds are there. For its working, two sources of funds are there. One is owner's fund and another one is borrowed fund. And issue of share is the major source of owner's fund to the organization. Issue of share is the major source of fund to the organization. So we have to learn another feature of company from the meaning. It's very clear. It is a body corporate formed on the basis of a separate law, Companies Act of 2013. Now we are following. Previous was Companies Act of 1956. It has separate legal entity. Separate legal entity means the owner and the means the member and the company is the firm is two different entities, and it is the liability of shareholder is limited. Every time it is limited, maybe up to a guaranteed amount or up to the shares taken by them. Perpetual succession is another feature. Every company is started registered for continuing the business for a long period. A company can be terminated only through law, through the provisions of law. And it have a common seal. Common seal means the official signature that will be signed in the important documents of the organization. Shares of the company is transferable, especially public companies. Shares can be easily transferred from one particular person to another person. So these are the features of a company, and the different kinds of company. Only for a general awareness, it include companies limited by shares, companies limited by guarantee, unlimited company, public company, private company. These type of companies are there. From this area, it's very important. The share capital of a company is classified into the following categories. One is authorized capital. You know very well, there will be a certain amount at the time of registration of a company, which will be mentioned in the memorandum of association of the company, an important document to be submitted in front of the registrar at the time of company's registration. Already you have learned it in the class 11 chapter formation of a company. So remember that authorized capital is the initial investment made by the company, which will be noted in the capital clause of the memorandum of association. And suppose the company wants to raise additional fund, they want to raise additional fund, it will be collected. It will be collected from the public by issuing share. One source of raising capital. So by issuing share, an invitation will be sent in the form of prospectus to the public regarding the number of shares issued and per value of each share. So the company can issue only a certain portion of the authorized capital as issued capital to the public. So issued capital means the part of authorized capital which is issued to the public subscription, issued to the public to come and subscribe the shares of that company, that is known as issued capital. For example, company issues 10,000 shares of rupees 100 each. 10,000 shares and per share value is rupees 100. That is 10,000 into 100. 1 lakh or 10 lakh. 10 lakh. Yes, 10 lakh is the issued capital. And what is subscribed capital? The actual amount of money or the application given by the public that constitute subscribed capital. That part of the issued capital which has been actually subscribed by the public. For example, 10,000 shares issued. Suppose we are getting 15,000 application for 15,000 shares. That is the subscribed capital, we can say. But it is over subscription. We need only 10,000. Suppose we are issuing 10,000 but we are getting application only for 7,000 shares. That is known as under subscription. We will learn it clearly in the coming lessons. And the part of subscribed capital which is called from the public, that is known as called up capital. You know very well, collecting fund by issuing share is an internal liability to the organization. Internal liability means the company have to pay the amount to the shareholders. That is why it is an internal liability. Shareholders are the owners of the organization. So called up capital is that part of the subscribed capital which is called by the company. As per my example, 10,000 shares issued at rupees 100. Suppose the company is called that 10,000 shares at rupees 50, that is called up capital. Suppose they are calling the full amount, that is called up capital, 10 lakh. Suppose they are calling 10,000 shares at rupees 75, 7 lakh 50,000 is the called up capital. And the remaining is uncalled capital, which will be taken only at the time of emergency. That uncalled capital will be taken only at the time of, it will be collected from the public, that shareholders, only at the time of emergency. That is known as uncalled capital. And what is paid up capital? The actual amount of money paid by the public to the company is known as paid up capital. There will be sometimes arrear. Some shareholders will not pay the amount of that application. That will reduce the total paid up capital. So remember, these all are the classification of capital, not shares. It is classification of capital which is to be noted in the note to account of a company. It is not directly showing in the company's balance sheet. It will be noted in the note to account, another statement which shows the classification and counting of each headings and subheading, which will be recorded in the final balance sheet, vertical balance sheet. So please remember the classification of capital. So it is an example of the classification of, or an example from the problem, just for knowing how the capitals are arranged. So that company started with an authorized capital of 50 lakh. It is the format of note to account. A statement prepared to find the total of share capital or reserves or the total of non-current liability, like that. Here from the example, authorized capital 50,000 is noted, and just look at here, it is closed. It is not taken for calculation, further calculation. Issued capital of 50 lakh what is issued to the public, that also closed. But subscribed capital means 4 lakh 50,000 equity shares of rupees 10. 45 lakh is the amount. It is subscribed, called up and paid up capital. There is an arrear. 500 shares who taken on shareholder who taken 500 shares not paid the call money. So 500 into 2, the arrear amount. And after deducting this arrear amount, we will get the actual amount paid by the whole applicants, 44 lakh 99,000. That amount, you know very well, when the capital introduced into the company, cash accounted to capital. Cash accounted to capital is the entry. So automatically the cash account also debited and capital account credited. So when we draw the format of balance sheet, there also under shareholders fund, we will write share capital, what we got, 44 lakh 90,000, 99,000, and under asset, we will write in current asset, the item cash and cash equivalents, amount of money coming into the cash or bank, 44 lakh 99,000. In this way, we are recording the items. Okay. And what is the different types of shares? You know very well, already in the chapter Sources of Business Finance, you have learned in the class 11 business studies. What are the different types of shares? One is preference share and another one is equity share. You know very well. These are the procedures involved in the issue of share. Already we have discussed in the class 11. But remember how we have to issue. We have to follow the formalities related to issue of shares. So issue of shares will begin with an invitation sent to the public, that is known as issue of prospectus. That prospectus will include complete information regarding the company, the nature of share issuing, value of each share, and how to pay the amount of application money, and also the allotment money in different installments. So once the application is sent it to the, means the prospect is sent it to the public, they will start applying for the shares. They will need, as per the number of shares issued by the company, they will apply. So apply means company will receive application from the public, that is receipt of application. After watching and reading carefully the whole prospectus, the public will apply for shares, that is receipt of application. Company will receive the application along with a small amount of money known as minimum subscription. The company will receive, as per the Companies Act, there is a provision, the company can receive minimum subscription amount while issuing shares. Along with the application money, the company can collect certain percentage of the face value of the share. Nominal value of the share can be collected. Suppose, for example, 10,000 shares were issued at rupees 10. We can collect 2 on application, 3 on allotment, and the remaining in different installments. So at the time of receiving application, we can collect 10,000 into 2. We will get 20,000 from all the applicants. And after collecting the application, the company management, the board of directors will scrutinize. They will analyze the application very carefully. They will analyze the creditworthiness of the applicant through the details. After, once they are satisfied, they will issue a letter known as letter of allotment. That is another procedure. They will allot the share to the applicants along with the letter of allotment, which will include the details regarding how to pay the remaining amounts. How to pay the remaining amounts. Sometimes the remaining amount, after receiving the minimum subscription rupees 2, the remaining 8 rupees will be collected with the allotment or in other installments. If they are collecting rupees 5 out of 10, 2 collected. If they are collecting rupees 5 at the time of allotment money will be what? 10,000 into 5. We have to write journal entry for that also. And if there is any amount remaining, and in this rupees 3 is remaining, we can collect in different installments. Installments are known as that type of amount received through remaining amount received through installment is known as calls. CALLS, calls. That is the concept you have to remember. So calls are the installments through which a remaining amount related to issue of share is collected. So that are the procedures involved in the issue of shares. Now we are moving to the preparation of journal entry related to the issue of share. First of all, we have to learn what is the entry. What is the entry for recording at the time of application. So remember the first entry. Whenever the company receives the application, there will be one registered bank, the company's bank account through which they are receiving the amount. So as I told, the company will receive a minimum subscription amount along with the application. The company will receive a minimum subscription amount along with the application. And the entry will be what? Bank account attached to share application. When the company receives the minimum subscription amount, application money, bank account of the company will be debited to share application credited. Application money, the minimum amount of money will be received. As per my problems, the company issued 10,000 shares of rupees 10 each, and rupees 2 is collected on allotment application, and rupees 5 on allotment, and remaining rupees 3 on first call. Here we will write the entry, bank account attached to share application, amount will be 10,000 into 2. And second entry is what? The money will be transferred to share capital account. Once the company's bank account is collected all the application money, it will be transferred to company's share capital. Why? Because we are issuing shares for raising capital. That capital which is raised through the issue of share is known as share capital. So the entry will be share application account attached to share capital. And the last entry for money refunded or rejected on application. And sometimes the company will reject excess application. They will reject excess application. How they are rejecting? Suppose I had issued, my company issued 10,000 shares, but public applied for 12,000 shares. That 2,000 shares is excess. Actually, it creates liability. Normally, when company issues shares, it is an internal liability for the organization. So, if the company takes the decision to reject and refund the excess share, we have to pass the entry, share application to bank. It is the opposite of the first entry. There, bank account attached to share application. Here it is share application account attached to bank. That is related to excess application money rejected and refunded or returned. And remember, this entry is applicable only at the time of oversubscription of shares by the public. So these are the entries we have to record in the book of records of that company. First one will be bank account attached to share application. Second entry will be bank share application to share capital. If anything is rejected and returned, entry will be share application account attached to bank. So please remember, these are the common entries we have to remember every time up to the end of this chapter. So once the application is over, the company will start sending letter of allotment. So at the time of allotment also, first entry is the due entry. Due entry means what we have to receive at the time of allotment. What we have to receive at the time of allotment. So share allotment account attached to share capital is the first entry, due entry. So as per my problem, 10,000 is the share issued and rupees 5 is the allotment money. So what we have to write? Share allotment to share capital rupees 10 into 5, 50,000. That is the entry related to due entry related to writing the amount what we have to get through allotment. And after that, we have to adjust that entry. We have to adjust that entry. The entry is what? Share application to share allotment. That means sometimes the excess application will be that excess application money received on 2000 share will be adjusted in allotment. They will not reject. Instead of rejecting, they will adjust that amount along with the allotment money. So once the excess application 2000 is adjusted 2000 into the application money rupees 2. So 20,000 is 4,000 is adjusted at the collection time of allotment. Entry will be share application to share allotment. We will learn on topic pro rata allotment. There you have to remember the entry related to rejection and adjustment of excess application money with the share allotment. After that, the entry, third entry, common entry is what? Share allotment account added to share capital, due entry of allotment. Due means what we have to get. And when we receive the allotment money from bank, so bank account added to share allotment. When the public gives and the company collects the amount through the bank, entry will be bank account added to share allotment. So these are the entries, and the share application to share capital, share application account added to share allotment. That entry is not common. It is only when the shares are applied and applied to 10,000 and public, the company issued 10,000 and public applies for 12,000 or 15,000. At that time, we have to adjust in two ways. One is rejection and another one is pro rata allotment. And the difference or the remaining amount will be collected in different installments known as call. That is on receipt of call money. Call money means the remaining amounts are collected through installments, through different installments. Each installment is known as call. First entry is related to share call account debtor, share call account debtor to share capital. Share call account debtor to share capital. Share first call, or suppose it is first call. Share first call account debtor to share capital is the first entry. Second entry will be bank account debtor to share first call. Whatever may be the number of calls, it will change as per that. So when we receive the call money, remaining installment money, bank account debtor to share call. Bank account debtor to share call. That is the entry. So my dear students, these are the common entry we have to remember related to writing journal entry in the book for the issue of share, raising capital through the issue of share. So please remember the different steps. Here we are going to solve one problem. X Limited invited application for 10,000 shares of the value of rupees 10 each. So what is the number of shares issued? 10,000. And what is the per value of each share? Rupees 10. Rupees 10 each. That is the value of share. And the amount was payable. That is payable to on application. Minimum subscription amount. Rupees 2 on application. And rupees 5. Rupees 5 on allotment. At the time of allotment, we had to receive 5. And the balance money on first and final call. Only one call is there. Remaining amount will be collected on first and final call. The whole of the above issue was applied and cash duly received. We have received all the amounts. No arrear is there. Give journal entry for the above transaction. Please look at the first entry. First entry will be what? Please, you have to write the entry by drawing the journal entry format. Okay. So bank account debtor to 20,000. How we are getting the 20,000? 10,000 into application money 2. Number of shares into application money 2. So bank account debtor to share application, the minimum subscription amount we are receiving is 20,000. Don't forget to write the narration. Being the application money received on 10,000 shares at rupees 2 per share. So that is the thing. Second entry, that amount is transferred from bank to share capital. That is transferred from bank to share capital. Entry will be share application account debtor 20,000 to share capital 20,000. What is the narration? Being the transfer of application money or 10,000 shares to share capital account. That application money is transferred to share capital account. Next entry is for the allotment money due. There is nothing regarding the rejection or pro rata allotment. What the company issued, they got back. 10,000 shares issued, they are getting back 10,000. So at the time of allotment, when the company sends the letter of allotment, the entry will be, after getting the letter of allotment, the applicant will pay the allotment money. At that time, the due entry will be share allotment account debtor to share capital 50,000, 10,000 into 5. Share allotment account debtor to share capital 50,000. Don't forget to write the narration. And fourth entry will be the amount of allotment is received through bank account debtor to share allotment. When the applicant and the public gives the money, we have to write like that: bank account debtor to share allotment 50,000. And the remaining amount will be collected through calls. Remaining amount is what? 10,000 into 3. So share first and final call account debtor 30,000 to share capital 30,000. So that is the due entry. And when we receive this 30,000 through bank, entry will be bank account debtor to share first and final call rupees 30,000. So my dear students, you have to write the journal entry by following the same format. This problem shows the basic journal entry related to the issue of share capital. So we are moving to another problem related to the issue of shares. My dear students, next important topic is calls in arrear. It is calls in arrear when the shareholder fails to pay the amount on the due date. If the shareholder fails to pay the amount of money, amount of first call or maybe second call on due date. Due date means what? Once the company issues letter of allotment, in that letter the company will clearly mention on which date they have to pay the first call money or second call money, like that. So that is the due date on which company will inform. Already through the letter of allotment, the company will inform the shareholder have to make the payment of first call or second call. So if the shareholder fails to pay the amount, maybe at the time of allotment or at the time of first call or at the time of second call, that is known as calls in arrear. Very important. We have to be well aware about how to write the arrear amount related to calls in arrear. It is very important. You know very well, 8-mark question is the maximum question in the board exam. And from share capital, definitely there will be one question for the issue of shares with the complex adjustments. So in that, calls in arrear is on important adjustment. We have to be well aware and be prepared. And what is the entry? The entry is what? Calls in arrear account debtor, calls in arrear account debtor to share first call, to share second and final call, to share second and final call. That is the entry. And this entry is adjusted with the money receiving entry. What is the money receiving journal entry? Bank account debtor, calls in arrear account debtor. If it is failed to pay on share allotment, then the entry will be like that: bank account debtor, calls in arrear account debtor to share allotment. If the failure is at the time of first call, bank account debtor calls in arrear account debtor to share first call. And also, like if the shareholder fails to pay the amount of second call, the entry will be bank account debtor calls in arrear account debtor to share second and final call. And my dear students, we can adjust the calls in arrear amount, maybe by opening calls in arrear account, maybe by opening calls in arrear account, or without opening calls in arrear account. If we are opening the calls in arrear account, we have to write the amount for calls in arrear account. And the journal entry will be what? Bank account debtor calls in arrear account debtor to share allotment. If we are not opening the calls in arrear account, the entry will be bank account debtor to share allotment or bank account debtor to share first call. No need of writing the calls in arrear amounts. At that time, we can deduct the amount and what we are receiving actually in the bank account, that is to be recorded. That only to be recorded in the company's bank account. And if the shareholder fails to pay the first call or second call or the allotment money, and the person have to pay interest, the person have to pay interest for that same, for the arrear amount, the person have to pay the interest also. When the amount is paid, at that time, that shareholder have to pay the money, call money with the interest. So entry will be bank account debtor to calls in arrear account to interest. So these are the entry we have to remember. And remember, interest we have to pay only if it is mentioned in the question. Otherwise, no need to write the entry. So please look at this question. That will give you more practical experience regarding how to write the entry at the time of calls in arrear. The Chronic Limited issued 10,000 equity shares. You know very well, two types of shares are there, equity and preference share. Here it is 10,000 equity shares of rupees 10 each. And it is payable at rupees 2.50 on application, 3 on allotment, rupees 2 on first call, and the balance of rupees 2.50 on second and final call. And all the shares were fully subscribed by the public and paid, except a shareholder having 100 share. The person who received a 100 share failed to pay the second and final call money not paid, but he paid up to first call all the amount he paid, but fails to pay the second and final call. So my dear students, please look at the solution how we have to write the entry. So what is the first entry? Bank account debtor to share equity share application account 25,000, 10,000 into 2.5. When we receive the amount and in the share capital, when we transfer that amount into share capital, entry will be equity share application to equity share capital 10,000 into 2.50, 10,000 into 2.50, 25,000. And when the shares are allotted to the public, the due entry will be share allotment account debtor to equity share capital. 10,000 into allotment money 3, so 30,000. And when the amount of allotment money is received, bank account debtor to equity share allotment, amount will be the same 30,000. And what is the next entry? The due entry for share first call. When the share first call is due, 10,000 into 2 will be collected by the company. So 20,000. When they receive the amount of share first call, bank account debtor to equity share first call 20,000. After that, we have to write the due entry. Due entry, you know very well. What is the amount? The entry for amount we have to collect. Yet to collect. So share second and final call to share capital. 25,000. 10 into 2.5. 25,000. And when we receive, there we have to show the arrear for 100 shares. There we have to show the arrear for 100 shares. So what is the arrear? 100 into 2.50. 100 into 2.50. Calls in arrear account is opened. So 100 into 2.50, 250. And the remaining 25,000 minus 250, 24,750 will come into the bank. That amount will come into the bank. And what we have to actually receive in equity share second and final call, that amount 10,000 into 2.50, 25,000 what we have to receive, but we are getting only 27,750. So this is the last entry related to calls in arrear. Here we have opened the calls in arrear account. How it is clear? The calls in arrear account is debited there. So bank account debtor 24,750, calls in arrear account 252, equity share second and final call 25,000. Suppose if we are not opening the calls in arrear account, what will be the entry? Bank account debtor 2, equity share second and final call 24,750. 24,750, that amount only we will take. Once again, bank account debtor to equity share second and final call 24,750 we will take without opening the calls in arrear account. So my dear students, these are the entries related to calls in arrear. Please look at the next topic, last topic for this video lesson, that is calls in advance. Sometimes the shareholder will make the payment of remaining calls in advance. For example, if the shareholder pays the first call money with the allotment, that is calls in advance, or the second call money with the allotment, or the second call money with the share first call. They are paying the amount in advance. That is known as calls in advance. That amount received in advance from the shareholder is always a liability. So the company have to pay interest for that. But remember, the calls in arrear account is debited, but calls in advance account is credited. So the entry will be bank account debtor. First entry will be bank account debtor to calls in advance. So you know very well, there is a particular date for the making payment for allotment or call money, maybe first call or second call. So whatever may be advancedly received, they will readjust. They will adjust the advance money received at the time of that due date. So that entry will be opposite. If it is adjusted on first call, which is received with allotment. So calls in advance account debtor, bank account debtor calls in advance account debtor to share first call or share second call, like that. This entry is related to adding back the amount already received. Recording back what is the amount already received. Sometimes the company will charge interest. So company will pay interest for advance receiving of the call money. So at that time the entry will be interest on calls on advance account debtor to bank. Interest on calls in advance account debtor to bank. And the amount of money is due. Due entry is that interest on calls in advance account debtor to sundry shareholders. That is the entry, but this entry is for the receiving of that money. So my dear students, please remember the basic entries for calls in advance, bank account debtor to calls in advance, and calls in advance account debtor to maybe first call or second call, like that. We are going to solve one problem to get the idea very clear. Konica Limited is registered with an authorized equity capital of 2 lakh divided into 2,000 shares of rupees 100 each. issued for subscription 1000 shares. They issued for subscription only 1000 shares. And it is 25 per, received as 25 per share on application, rupees 30 per share on allotment, rupees 20 per share on the first call, and the balance on the balance when required. Actually, it is not collected, only when it is required. Application money on 1000 shares was duly received and allotment money was made to them. The allotment amount was received in full, but when the first call money was made, when they collected the first call money, one shareholder who failed to pay, arrear, calls in arrear. One shareholder failed to pay the 100 and one shareholder paid in advance rupees share of for 50,000, 50, not 50,000, 50. One person made the arrear, 100 is the arrear share and 50 is the calls in advance share. So what are the entries we have to write? First entry is related to bank account debtor to equity share application. Bank account debtor to equity share application 1000 into 25. So 25,000. And equity share application account debtor to equity share capital 25,000. When the amount is transferred to share capital. And the allotment money due, the entry will be what? Equity share allotment account debtor to equity share capital 30,000. 1000 into 30. When the money is received, bank account debtor to equity share allotment 30,000. And look at the entry, due entry for share first call. Here equity share first call, up to that they are receiving. So equity share first call to equity share capital amount 20,000. It will be clearly given in the question. So 1000 into 20 is the amount. After that, in this entry, we have to adjust the calls in arrear and calls in advance. How we are adjusting? Look at that entry. Normally, what entry we will write? Bank account debtor to equity share first call. That is the entry we will write, and amount will be 20,000. But as per this problem, there is a calls in advance, 50,000 shares of rupees 25. So 50,000 into 25 means calls in advance 1,250. Once again, there is an advance number of shares 50,000 at rupees 25. That is calls in advance. Second call money received in advance with the first call. So we will write two calls in advance. It is credited and the amount will be credited 1,250. And what is the arrear amount? 100 share into 20. 100 share into 20. So we will write calls in arrear account 20 into 100 what? 2,000. So 20,000 plus 1,250, 21,250 minus 2,000, we will get 19,250 what actually received in the bank. So my dear students, in this problem, calls in arrear and calls in advance is there. Please try to solve maximum problem at home. I hope this video is very clear for you. Any doubt regarding this, please ask through the comment box, or any doubts regarding the previous videos, you can contact me at any time in my email or in the comment box. So thank you for your patient listening. Thank you so much. We will meet in the next class with very important topic, pro rata allotment. So thank you. Have a nice day. Bye.